Hello, everyone. Welcome to today's Forex webinar. Thank you for your patience waiting for us while we sorted out our audio and as you can see my slides. So as I said, thank you so much for being so patient, and thank you for taking the time to come and join us to look at what is going on in the forex market. But before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I know we have some of our forex students with us, and I think we've got some of our quantum users, and I know we've also got people who maybe it's your first time, or you bought some of my books which are available on Amazon, which explain the methodology that we use to analyze the markets generally. Forex, there are forex specific ones as well, but it's primarily based on price action, volume, support and resistance. We use candles, candle patterns, and we also look at time. So before we go over to the charts, very quickly, just a quick roundup of what is happening today on the news front. Although I have to say, you know, the fundamental news at this kind of time of the year, it's kind of taking second place to what is happening in the sense of sentiment that has been driven by virus news. Those of you who come along to our stock webinars will know that we've talked about this at some length, and markets, as you well know just by looking at the charts, are all over the place. I think what we can say, and it's really what's happened over the last couple of days, it's kind of borne out what we said, was it last week or the week before, is these last weeks leading up to the holiday period, Christmas and the New Year, we have something called Santa's Rally, and it's where the market always likes to end on a positive, upbeat note, and it's almost as if it's kind of ignoring everything else, and it's determined that it's going to end on this upbeat note. Now, whether it does or not, we will simply have to see. We've had some extraordinary moves we saw yesterday in the indices. The Nasdaq had been lagging, and then suddenly it caught up and you know, put on over 500 points. The Dow was up another 500. But these moves that we're seeing, the other thing you have to bear in mind is, great as though they are, and fantastic if you day trade them. You know, days like this are the days that you pray for, because you know you don't want to be in something that is only limping along within a very narrow range. You also have to bear in mind that as we move closer to the end of the year, liquidity drops. So not only do you have to contend with the volatility that is part and parcel, that is a result of whatever the latest virus news seems to be, maybe the political news, the geopolitical situation with Russia. There's still China in the background, Evergrande, the potential default by this company. I think there are others potentially on the line. There's all that still going on in the background, but you also have to contend with the volatility that can happen when liquidity is sort of draining away. So what happens is you get price spiking, you get just price going all over, and you get candles with lots of wicks to the upside, wicks to the downside. And in fact, I had an email from someone who has read the books and wanted to know why. He traded some sort of the more esoteric bitcoins, not bitcoins, cryptocurrencies, not so well-known ones. You know, they don't have a lot of liquidity. They're very much like penny stocks. And he wanted to know why. You know, he had all these candles with wicks at the top, wicks at the bottom, dojis going up, whizzing about all over the place. Well, that is why. You know, when you have thin markets, thin liquidity, that is the result. the resulting price action are these types of candles. Now, can you trade them? Well, you know, if you're on a very, very fast time frame and you don't stay in very long, you know, anything is possible. But to return to the markets in general, so we have two volatility drivers. We have the driver from reducing liquidity, and we still have the volatility, as I said, the response to, you know, I know some piece of news tomorrow coming out that the latest variant is not as benign as everyone thought. You know, virus is never benign, but it isn't causing the huge problems that they you know, that they had been anticipated. Or we could get more good news saying that the vaccines are very, very efficient, that this is just no more than a, you know, the symptoms are no more than a cold. And so the market kind of moves on. So that's the kind of market environment that we are at the minute. So when we come to the news today, we look at what's going on. Well, we've got a rate statement from the Bank of Canada. The BOE, I think, is next week. And then, of course, we have the Fed as well. And it really pays now, particularly if you trade the British pound. There've been some comments in the press saying, well, you know, they're probably not going to raise interest rates this time around. They're talking about February, and you know, that's part of the reason why the pound sort of sold off quite heavily in the last couple of days. But today we've got the Bank of Canada, and the loonie has been on a real tear, and we're going to look at the charts, a couple of pairs that feature the Canadian in particular. So that's where we are today. Very, very quickly, what does Financial Juice say? Pretty much the same. Probably have a few more releases, and the economic trading economics that we have over here. Where are we? Wednesday. Here we are. What have we got? Well, we've had Lagarde has already spoken. And it's mainly crude oil this afternoon. That's also potentially going to have a link to the Canadian dollar, together with the BOC interest rate. So it should be an interesting afternoon for the Canadian dollar. Right, let me just pop that down, have a quick look at what is going on my charts. That's very quickly. And I've only got MT4 today. I have actually started to set up my my trading view. I've actually opened a premium account with trading view, and I'm kind of getting to grips with the charting package. It's the first time I've had a chance to have a look at it in more detail. It's got some very, very nice features. I will say that for it. So far, I'm not 100% convinced of the function. You know, it doesn't give me quite the same functionality that I get from MT4. I do keep coming back to MT4, which is one, you know, where most traders start. And I have to say, maybe it's just the way I've set it up. The way I set it up is on this 5-chart configuration. As you can see here, I've got a Renko, I've got a 5-minute, I've got a 15, I've got an hour, a daily, and I've got the matrix, and I've got the CSI underneath it. Now, the reason I have the pound CAD up is because yesterday, and we'll have a look at the daily chart for the pound CAD, because it's just, you know, it's just an example of the topic that I was going to address today. One of the is when you have big move days like yesterday, as you can see here, where you have this very, very big candle. It looks like, you know, the volume underneath it looks kind of consistent, possibly a little bit light for the range of that candle. But remember what I said about liquidity reducing, as you know, volume is context, not just context of the session that you're trading, but also the context of, in terms of seasonality of the time of year, the time of day, the time of even sometimes the day of the week, as it were. So, but it's still quite, you know, it's still a reasonable amount under there. It's not as much as, you know, if you look at this candle, we talk about benchmarking, it was about the same. That candle's not quite as, you know, the range of this candle is more than this candle, But as I said, we do have these very particular factors at this time of year. We're also coming to the extreme from the volume point of control of itself should provide a degree of support. Now, the reason I've pulled this one up is because it's a good example of when you have a big move day like we had yesterday, whether you may have been in there, you may not have been in there. Let's say you weren't, but you saw that move, and today the question is that, are we going to get some kind of reversal, or are we going to get a continuation? And this is always the dilemma that we face as traders. You know, we see an opportunity, and then we have to, you know, especially after a big move, your mind goes on. You know, you have this decision: is there going to be an opportunity to join this original? If we take that as the primary move lower, it certainly was from the break. It's actually a successful break from the volume point of control on this chart. So we have a down day and then a big down day, and you think, okay, is this going to go further, or actually am I going to be better off, you know, is this move coming to potential strong support? Is it time possibly to look for reversals? And there's no easy answer. The answers are going to be found on the chart in the multiple time frames. They're also going to depend on the time frame that you trade. Are you a very short-term trader? So if you are a short-term trader, if you look down, once this candle completed, there was a little tiny, can you see that little tiny, there's not tiny, but it's a wick to the bottom of that candle. And in fact, there was a reversal because we have the wick to the top of the candle. Now, in that wick there may well have been a trading opportunity if you are on the faster time frames. But let's say no, you know, you still are of the view that this is going to go lower, so you will be looking for a potential to rejoin the primary trend. So what do you look for? Well, certainly the candle on this chart would be one that you could certainly consider, because there's obviously been an attempt to rally and it has been beaten down, but it's gone as far as this support level here, which we can see in previously has acted as support and has acted as a reversal. But having said that, on the faster time frames, I'm looking at the daily chart now and looking at using the Renko with the 5-minute chart. If we look at the 5-minute chart, we can see here. So this is the attempt to rally that we saw on that wick on the daily chart. As you can see, this is when support and resistance. This is when you look at support and resistance and how they act as we can see here, as barriers to the reversal higher. We've actually got, it's almost like a little double top here. Then it goes back to, we have the volume point of control, a hugely important element of the chart structure, because the volume point of control is that area of the chart where you have a congestion, you have a consolidation, you have a pause point. And in fact, one of the things we were going to look at in more detail, and I mentioned it to David last week, was, is there a difference between consolidation and an accumulation or distribution? And the best way I can describe it, the difference is, a consolidation is a sideways movement, and it can occur for lots of different reasons. It can happen prior to an important announcement. So for example, this has got Canadian in this pair, so we know we've got the BOC coming along later, so we know we are going to get consolidation. We are going to get a sideways movement because the market is waiting, and it's waiting for an important piece of news, and then it's going to make a decision. Or you can get a consolidation because this pair isn't in a particular time zone. It's a pound CAD. Is it going to be heavily traded during the Asia session? The chances are no. It's not a local currency, so you will get a consolidation. Now, accumulation and distribution, you have to have sideways. You have to have consolidation. You have to have a range bound. But accumulation is exactly that. It is the insiders accumulating, waiting before to move the price in one way or another. So you can have consolidation, but it isn't necessarily, you can have, but not necessarily accumulation or distribution. But you can't have accumulation and distribution without consolidation. Does that make sense, David? That sort of explain the difference. But the other thing about consolidation periods is look at the shape of the candles, and the volume point of control, because it is this region where there is a degree of price agreement, in the sense that there's no clear direction. We've had an attempt to rise. It's back at the VPOC. Look to where the wicks are at the bottom, at the candles. Are they more generally to the top or the bottom? Doesn't always, you know, but if you have a sideways movement with lots and lots of candles where, you know, we've had effort to rise, pushback, effort to rise, pushback, effort to rise, pushback, the chances are it is still going to look, it's still, you know, bearish. And we can see from the daily chart that this, you know, it's already had a big down day. And in fact, we do get the break from the volume point of control. It actually happened around the London Open, which is what you would expect because we've got the British pound here. And this is the move that is that we're looking at the moment. And in fact, it's gone all the way down to the volume support that comes from that is derived from the VPOC in this area. So that's the 5-minute chart time. How does that translate to the Renko? Well, the Renko, you can see here, this is reflecting, you know, this move higher up to the R2, and what it does, it smooths out all the little pullbacks and little corrections. And you know, a decent move you can see is when you have this you know, an agreement between the trend dot and the trend monitor. When it's moving sideways, you are going to get this choppiness, but you will be able to see that on the time chart. You will see the consolidation on the time chart. So, you know, you use the Renko in conjunction with the time chart. The Renko gives you the beautiful geometry of the price action, and using the time chart will tell you, are you in a consolidation? Are you moving sideways? You know, wait until you see the break. And we've had, as I said, we've had the break. And really, what we suggest is when you get, you know, a clear agreement between the dot and the trend monitor. That's for entry, and it helps to keep you in. You can see here we had a pullback here. This didn't move. In fact, we still had red dots there. They kind of went white. They went, this is the in-between color. For exits, you can certainly watch the Renko, and certainly you should do that, but be aware that on what is happening on the time chart. And what was interesting with this move going up to the 15-minute chart, and I actually thought it would potentially come to an end there, because we had a trigger of the volatility candle, and we had a little bit of buying coming in. We had a retrace to within the spread of the volatility candle on the 15-minute chart, but no, it has continued lower. But we're at, you know, quite important support on both time charts, on both the 15 and the 5. And if we move over to the, although, you know, the Renko is still holding us in, so you could say, well, yeah, I can see that potential support coming in, but let's see what the Renko's, and it may cut through. That support level may simply be taken out. We've got support on the 15, we've got support on the 5, we've got support on the hour as well, and we've also got volume support on the daily. So it's a really interesting exercise to see, you know, whether this will, we could get some volatility, and that all these support levels, you know, we get more volatility candles firing. So let's see what happens. And if we move down to the 5-minute chart for the CSI, which I've got here, let's move this to the pound. Where's the pound at the moment? Well, the pound, as I said, of the three, it's certainly being sold against the three commodity dollars. We've got the CAD, the New Zealand, and the Aussie. The pound is still being sold as we can see here on the CSI. But look at where the commodity dollars are. The Canadian is very overextended, the Aussie is still climbing, and the New Zealand is still climbing, and this is still falling. So possibly this is coming to a reversal, but the selling of the pound may rotate. You know, there's still an opportunity to sell the pound, certainly against the Aussie and certainly against the New Zealand. We have a sometimes what happens is when one currency is very overextended and the other currency is still falling, it's not ideal because it's very asymmetrical. What you want is the driver going equally in one way and the other, ideally. But as I said, a very, very interesting chart. And finally, what I was going to say as well, we did a where are we in yeah, we did a post on my site here. This is where you'll find market analysis. Details of all the books are up here as well. You'll also find the feed coming through from some of my Facebook pages. I tend to just do two now. I just do my own personal page, which is Anna Cooling, and there's general market commentary on there, links and what have you. And then there's the Forex one as well. I used to keep up a separate commodities one and stocks one, but to be honest, it was easier just to put everything under the one page. Right. But you will find very detailed analysis, mainly stocks and indices, but the lessons for VPA are applicable to, you know, whatever you trade basically. And the two most recent posts are on what we call stopping volume and topping volume. And I found a really nice example on the Euro Aussie, and I just wanted to highlight it because there's people say, well, what do you mean by topping volume? And I'll show you here. This is on the hourly chart, and that really jumped out at me. Here we are. Right, here we are. Let's just get the crosshair up at the moment. Right, here we are. We can see here the euro. Euro's a perfect example where it had a massive buy and then it has had a massive sell-off. And if you follow what the various members of the ECB are saying, and also some of the data that's coming out of Germany, you'll see why the euro has taken a real battering this week. But let's look at these volume bars and these moves higher for the euro against the Aussie. Lots of volume, lots of volatility candles, but still going higher. And then the volume kind of, you know, flattens out a little bit. Bit of an anomaly there, a very compressed candle, a bigger candle, but you think, that looks a bit odd. And then you get this candle. You get this little candle, and you have exactly the same. The volume bars are all identical, and you think, well, what on earth is happening? That is the kind of signal that you want to look at. Now, you could also say, yeah, but that was sort of 9 o'clock. That was almost at the close. That is true, and it's quite unusual, I have to say. But it is still relative. It is still in context, as it were. It's still in the context of what actually preceded it. But this is the sort of example that you want. You have the same amount of volume under this very squished candle up here as you had with that candle and that candle, and not much less under that candle. So on the way up, you will get a point where it's just the price can't go any further. It just cannot be forced. Now, as I said, I appreciate it was, you know, 2100 hours and almost at the end of the week, but I still think this was a perfectly valid, you know, it was perfectly valid in terms of the VPA, and certainly one to look at and say, that's interesting, let's see what happens, you know, when the market opens again, and then the rest is history with regards to the euro and the euro. In fact, the euro looks as though it's going to be falling again, and in fact, the euro is a good example of what I mean by. Let's have a look. Let's put them all back again. With the CSI, you can just click them on and off here. Right, this is the fall that we had in the euro. We also had a fall in the pound, but interestingly, we had a reversal in the euro, but the pound seems to be going ever lower. So that's what I wanted to highlight today. Let's go back to pound CAD and see what's happening there. See whether in fact the Canadian is ready to roll over. Yes, in fact, all the support systems have actually come into play. We had volatility candle come on the 15, volatility candle on the 5. The Renko was the first, you know, that kind of also came to, has come to a bit of a stop because it's come to a stop here on the 5-minute chart. What's interesting with the Renko, you don't get wicks on these bricks, but when it's very volatile, when you get when you get a lot of momentum, you will sometimes get a spike. You will see a spike to the bottom of the brick, and if it's at the bottom, you know it's trying to reverse. And obviously, when it comes to the top, you know that the pressure is to go is to go down, as it were, and it really does confirm what I said in the sense that, you know, the volume support is certainly holding on the daily, it's holding on the hour, on the 15, and what's happened on the 5, because it took it out, what the VPOC indicator does, it will take it out. You get a low volume node come through, and potentially another support level is then put in for you. So it is a dynamic indicator in terms of volume. It's not static. You know, the Camarilla are obviously static because they're just price based, but with volume based, it really, really does reflect what is happening in the market in real time. So we'll see what happens with this, but an interesting, lots of VPA lessons there. I could go on and on. I mean, I was going to talk about looking at chart patterns, looking at what was I going to look at? Yes. How you can see on the daily chart whether it's you know, you use your chart patterns, you know, the 2-bar reversals, when you overlay one candle on top of the other and you actually get a shooting star pattern. So when you start, you know, stick to the strong patterns, stick to the strong candle combinations, and, you know, use those, and at least, you know, so that to help you with your candle pattern reading. Where we are here, let's have a look. What did I say? It was moving against the Aussie. I'm going to pass over to David in a second. Pound Aussie. Let's see if that's got a little bit of volatility coming in as well. No, that's trying to, as I said, pretty much the same type of price action that we see on the pound Canadian. Let's move that to 15 minutes, easier there. The 5, let's go to 5. In fact, the Canadian has rolled. Let's have a look. The Aussie's kind of going sideways now, and the New Zealand is turned. So it looks like the commodity, you know, the commodity dollars, all 3 pairs are displaying the same type of price action. Right, if you've got any questions, please just pop them into the chat box. Before I hand you over to David, very, very quickly here, we talk about the indicators on the charts, and we do have a lot of resources to explain the indicators and how they work, and you know, possible ways of using them. This is quantumtrading.com. Let me just go back to the front page. Here we are. These are the platforms that we've completed at the moment: MT45, Ninja, TradingView, and TradeEdge. And as I said, I've just got MT4 today. I think David's got Ninja, and David has all the others. So there we are. But what I was going to say was, if you just click on there, and it will take you to this page, and there's resource material on every single one of these indicators. Now you can buy them individually, obviously, and if you want to, or you can buy the whole package, or you can buy, we have kind of bundle deals as well. But whatever you buy, so if you start with one or you start with the bundle and then you decide you want the whole package, you will always be credited for what you have, for what you've spent with us, basically. The advantage of the package is that whenever we develop new ones, they're automatically added to your package. You don't ever have to pay any more. So I don't know, we are looking at new indicators, particularly volume-based indicators. So when they come along, it'll just be added and that's it. So you don't actually have to pay any more. But what's also useful is, so for example, if we go to the Renko is a good example actually. Where are we? Live Renko, here we are. That's it. If you go down there, it's obviously got the price of the thing. You can learn more. There's the information about the indicators themselves. But what you should really do is watch the videos which explain in great detail not only just how to set them up, but potential ways that you can use it. It's a very dense site in terms of information. It does take a little bit of time to, you spend your time just going through, but there's an awful lot of information in there about trading and what these indicators can actually do for you. And I think the Renko is a perfect example of an indicator that not only helps you with entries, but much more importantly, helps to keep you in, which is possibly one of the most difficult things that there is in trading. So let me just pass you back to David. As I said, if you've got any questions, please feel free to put them into the chat box.
Hi everybody, good to see you, and unlike last week, not quite as rushed, so apologies for that again. It was a bit manic last week, sorry about that, and it's good to see you. Let me start with, just pull over the trading view for a minute. I've got the currency array out there, which is one of my favorite indicators, but let me pull this over. This is a snapshot. This is all 5 minutes, so intraday very much. Top left is the pound. We've got some pretty heavy selling on the pound coming in the last 10-15 minutes. That's on the yen. Yen's kind of going sideways, no great direction at the moment. Down the bottom here, we've got the dollar. A little bit of bullish, but it's hardly a strong trend. But this is what's really moving at the moment. Bottom right is the euro. And this is what you're seeing, this very strong move. And it's why I've been on the Euro CAD while Anna's been talking for the last 30 minutes or so. But it just gives you a snapshot of what is going on in terms of which currencies are actually moving. Those are the 4 currency indices. And the reason I got the array up was because, as I say, throughout the last sort of 20-30 minutes, I've got the Euro CAD on multiple timeframes. The Euro CAD was really moving nicely. Very strong selling in the euro, matched by strong buying in the Canadian. And as Anna said, one of the things when you look at the multiple CSIs and you're looking for the opportunities to take, ideally, and it is an ideal world if you can find it, is ones where, as Anna said, it is a symmetrical balance of buying and selling. You do, of course, get trends where you've got one currency maybe which is moving or very close to maybe oversold or overbought, and the counter currency is maybe only halfway to that particular target, if you like, or a third of the way. You will get trends, but in an ideal world, you obviously want to see the two trains on the tracks moving at opposing speeds which are more or less the same. You can't always find that, of course you can't, there's no perfect world in trading. But the reason I've pulled this up on the currency array is just to give you a sense of what you can expect to see. 10 or 15 minutes ago, the Euro CAD here was bright red. It was right down at the bottom. Of course, it was down here at the bottom on the 1 minute. This is on the 5 minute and also on the 10 minute, exactly the same on the 10 minute. I think it was one off the bottom, if not at the bottom. And now what we're seeing is that buying that we're seeing on that Euro index I showed you just now is forcing the euro. But what's more important is that what you're seeing here is universal sentiment towards the euro for whatever reason. It could be news, it could be political, whatever it is, doesn't matter, fundamental. The buying of the euro at the moment, certainly in terms of this very fast time frame on 1 minute, is universal. So in other words, the euro is currently being bought against all the other pairs. And the nice thing with the euro is it is always the primary currency. So what you expect to see is all of these at the top or all of them at the bottom as they are stacked up here at the moment. And what you expect to see, if that is a genuine trend, which is a longer term trend in inverted commas, and when I use the term longer term trend can apply to a 1 minute, 2 minute, 3 minute time frame, or a 5 minute time frame, or a daily or a week. It doesn't matter. It's just the concept of whichever time frame you are focused on. If that is a genuine shift in sentiment, then what you will see is all these pairs moving up to the top. You will start to see all these gradually move up to the top, as indeed they are at the moment. These are all sweeping around, and ultimately all up there, moving up here, and the same here. And it's just the currency array is just a very visual way of seeing all that actually in real time, if you like, with the strength of the trend. Where are we seeing the strongest trend? Well, it's pretty obvious from what I showed you earlier on. It's the euro pound, because the euro is being bought the most strongly and the pound is being the most strongly sold. So the euro pound is certainly one. It doesn't automatically mean the pound is being sold against everything else. And of course, what you do is then you isolate out. In fact, let me just do that. There we go. That's isolating out. That's on the pound. So, what is the pound doing? Is it being bought or sold universally? Pretty much yes. Not quite so much against the Aussie and the CAD, but certainly against the others here. Yes, indeed, and euro pound up there at the top. So that's what you're doing the whole time. You're just constantly flip-flopping around. You're looking for, what is the sentiment, and that is what's revealed on the currency array. And I make this point constantly about the currency array, and I've got the currency matrix as well. The difference between the two is, just go to the currency matrix. There we go. The difference between the two is, I lost one. Where's that one gone? Where's my middle one gone? There we are. Oh, how funny, it's not loading there. Let me go back to the currency array. I can talk about it there anyway. But basically what is happening in terms of time frame, let me go on to show you here on TradeStation. In fact, let me go over here onto Trading View. Where are we? Let me just find the one I want, if I can, very quickly. Where's it gone? I had it a minute ago. This one. There we go. Let's just pull that over. In fact, this probably shows it better. Right. This is on, I've got a 5 minute here and I've got a 2 minute, different time frames, so it doesn't matter. What you will see on the matrix is the matrix works very close to the market. So the changes that you see on the matrix will be reflected much more closely in terms of the price action than the currency array. And the reason for that is because the currency array, just bear with me one moment, hold on a moment, I'm just going to clear my throat. Apologies, sorry about that. I just had to grab a drink. So the difference between the two is to do with the look back period. On the currency matrix, the look back period is very short, whereas on the currency array, it is longer. I think off the top of my head, I think on the matrix it's 7, and I must admit, I can't remember what it is on the array. So basically, you can imagine these as the same way as we explain the trends indicator and the trend monitor indicator. Because on the trend indicator works very close to the price action, and therefore changes in trend react very quickly. On the trend monitor, they take a more considered view. They react more slowly. And it's exactly the same principles here. The currency matrix will be the first to react. You'll see the currency pairs move up and down, obviously, and stack in the same way as they do on the currency array, but they won't necessarily line up. We get quite a few emails say, well, why does the currency array not show exactly the same as on the matrix? Because it's a much slower look back period. And what it's trying to do is, in the same way that the trend monitor is, it's trying to give you a different perspective on what is going on. So if you're an out and out scalping trader, then the currency matrix is the indicator to focus on. If you're a slightly longer term trader, then you look towards the currency array. But you can, as an intraday trader, you can use both, because you can take the currency array down to any time frame. On TradingView, you can take it down into seconds if you wish, but it'll work in exactly the same way. So I just wanted to highlight it because it is so important to understand this point about the difference between why we develop the indicators and what they actually do. As I say, the currency matrix works very close to the price, and the currency array takes a more considered view. Both of them will look at in terms of sentiment. If you isolate out in terms of, you can see up here, we've got the euro up here pretty much stacked. This is on 5, so it looks as though that euro buying is following through. Just have a look over here. This is the euro. This is what we're seeing. A little bit of a pause point here, but that's what we're also starting to see a move in the yen. Dollar isn't really going anywhere. It's still got a sort of bullish tone to it, I guess, but it's sort of congestion with a mildly bullish tone, if you can express it in that way. The pound is still selling off here. The euro's come to a bit of a pause point, starting to see a bit of a move in the yen. But basically, that is the point I wanted to make about the matrix and the array. The other point about it is this: we added this particular functionality to it because the numbers per se give a sense of how far we are from the midpoint of 0, if you will, which is slightly self-explanatory, but the important point is these are currency pairs, so you can view it in exactly the same way as you would do a currency strength indicator when a currency reaches either an overbought or an oversold condition. It's when it's approaching those sorts of regions. And as you can see here, we've got the all-time high and we've got the average here. And bear in mind, this is obviously over the look-back period. This is not forever and a day. This is not over a daily. This is on 5 minutes. So we're looking at this over the last 7 or 8 candles. But it just gives you a perspective on whether that particular currency pair that you're looking at now, rather than a currency, is actually at an extreme. Is it as a point where there is potential for an opportunity? And when we look down here at the bottom, you've got exactly the same thing, all-time low and the average. So this is well oversold. This is well overbought in that sort of context. And in addition to that, we've now ported this over. We're working on, as many of you know, work on NinjaTrader. So we've brought that over across to NinjaTrader as well. And we're just working on that also. This is on, we're back on TradeStation here. This is on multiple time frames. You can see what's actually going on. This is on 1 minute, this is on 4, this is on 5, and this is on 15. So a nice spread across the time horizons. We've got this very strong buying in the euro. The angle of inclination is telling you it's strong. It's a very strong move. You've got exactly the same going on in terms of Swiss franc. You can see that very strong buying coming in on the Japanese yen, this magenta line here. And in opposition to that, we've got this very strong selling of the Canadian dollar, which got up here into highly overbought. Yes, it's reversed here sharply as well. Does it always work like this? Is it always this straightforward? Short answer, no, of course it isn't. It just so happens in this case that it's got into overbought, it's flip-flop around a little, and now it's rolling over very strongly. Currencies can stay overbought and oversold for a long time. It doesn't automatically mean, for example, here on the 1 minute, that the euro is up into overbought now, and is it going to roll all the way back down? It may well do. The Canadian may well lift all the way up here and come right up to the top. But it doesn't always work in that straightforward way. And what Anna was trying to say in terms of this, the symmetry of the move is really expressed in terms of the Canadian, the Euro CAD here, because you've got, it's not perfect. Ideally, you want to see them crossing in the middle here somewhere, but pretty much you've got a similar sort of strength of buying in the Euro matched by similar sort of weakness in the Canadian. And that is what is going to drive a really, really strong move in that particular currency pair. You can see here the pound is still selling off in the slower time frames. where are the best trades? Well, again, you're looking at, strong buying in euro, so euro pound will be moving. Clearly, you don't need to look at a chart for that. Exactly the same way the pound Swiss will be moving very heavily. The pound yen would also be moving. But what you wouldn't be looking at would be, I don't know, pound New Zealand, for example, Aussie pound here, because they are moving in the same direction. It's always a case, you're looking for divergence. You're looking for those pairs which are moving in opposition to one another, strong buying in one, counterbalanced by strong selling in another. And what you're not interested in are those pairs, or those currencies rather, which are all moving in the same direction, which you can see up here, the euro, the Japanese yen, and the Swiss franc. They're all moving together in exactly the same way on this time frame, and also to a large extent on this time frame as well. So you're always looking for divergence. This is on, as I say, this is on TradeStation. And one of the great features of TradeStation is the radar screen, which we are replicating. We're using Market Analyzer on NinjaTrader. It's one of the things we've been planning on doing for a long time. So we are working on it on the NinjaTrader platform, and it'll work in a similar sort of way. We've already got it on TradingView. On TradingView, we were a little bit limited. We were only able to build, I think it was 10 pairs on the radar panel. But in terms of radar screen, the world is your oyster. I've got the 28 pairs here, and below it, I've got this little dollar matrix, which just gives us a straight through view on the dollar, but this could be anything, could be euro, it could be a currency pair based, or it could be based on a particular currency such as dollars, such as yen, whatever. And it's just such an easy, quick way. Not only do you get, this is on the radar panel, we've also incorporated the indicators exactly the same way as we have on TradingView. We've got them on TradeStation here, and this is what we'll do on NinjaTrader as well. So basically, we've got the volatility indicator running down here in this particular column. And then we've got the quantum trend monitor with the trend bar and the trend line, and we've got the trend dots here. I haven't got the trend dots on. But what it gives you is an immediate heads up as to what's going on. If we look at EuroCAD, click on EuroCAD, because 5 bars ago on the 5-minute time frame, and you can have these any time frames you like. I just happen to set them to 5 minutes. You can have different ones as well. You don't have to be limited to one particular time frame per radar panel. It tells us that 6 bars ago now there was a volatility trigger which was down here. Just pop that up full size. There we go. And it just gives you that instant way of seeing what is going on. You can see the trend monitor here. We transition through to blue. Just move the chat box out of the way. There we go. It just gives you all that information visually. You can start to see where everything is. You can get around very quickly. Let's go and have a look at euro. Where are we? Euro pound. Saw how strongly that was rising. That just flicks up, gives you all the time frames. I've got 1, 3. Oops, sorry about that. 1, 3, 5, and 10 over here. And again, it just gives you that visual information. You're starting to see the trend monitor's transition. We've got a lot of volatility as we move up on the 1 minute. Trend monitor's transitioned on 3. The trend monitor has transitioned on 5. Just pop that one up. This is on the accumulation distribution indicator, immensely powerful indicator, because what it gives you, and it works exactly the same way on NinjaTrader and also on TradingView, is that it gives you this visual representation of strength and weakness. In other words, the thickness of the line here instantly tells you, because it thickens, the line thickens according to how often this is tested. So every time a level is built and tested and retested, it immediately thickens the line accordingly. So the greater the number of times that an area is tested and holds, the thicker becomes the line. So you get this wonderful visual representation of strength and weakness. Weak lines will be relatively thin, stronger lines will be relatively thick. Let's go down onto the 10-minute. Let's move the chat box out of the way of work again. Just pop that up full size. Here we go. See, these levels are less. You can see the little digits down here which tell you how many times that particular level has been tested. These are less strong than that thick line I showed you on the 1 minute, but nevertheless, when you start to get clusters like these, that's when they start to come into their own and become much stronger areas of concentration. Just have a quick look around, see if we can see anything else. Let's see what's going on in terms of cable. We know we've got strong selling of the pound. It's not particularly strong against the dollar because the dollar is not moving particularly strongly in one direction or the other. Hence, the trend that you're seeing on cable is less pronounced than on the others. We've got volatility trigger there, looking for congestion. Remember always, if you're in a trade and you get a volatility trigger in your time frame, either close out the complete position, or if you've got multiple lots on the position, take some of them off the table, take it down to one. If you've got 3 or 4, take it down to one, just leave one to run. What you're looking for in volatility, whenever a volatility is triggered, as it was here on the 5-minute, you're looking for one of two things. You're either looking for a full-blown reversal or you're looking for congestion. And either way, neither of those are what you require. So if you're in profit, close out, leave one on the table or take the whole lot off and just sit tight and wait for it to be confirmed. If it's a reversal, fine, you might want to trade the other direction. If it continues, fine, what have you lost? Nothing. You've avoided the emotional pressure of sitting through congestion, and you can jump back in. What have you lost? A few points, a few pips, whatever it may be in terms of the spread, getting back in, fine. Which would you rather do? It's what I always do myself. I would say 99 times out of 100, unless I've got a very, very strong reason not to, then I will close out and get out of the market and just sit tight and wait intraday. And the other thing about the indicator is this, it triggers in real time. And what I mean by that is that the volatility indicator will appear as soon as the metric which governs it, which is looking at average true range. So as soon as that price action has moved outside the average true range for that instrument in that particular time frame, then the indicator will trigger. Now, when you're on a 15-second chart or on a 1-minute chart, maybe that's not so important. But if you're on a 5-minute chart or a 10-minute chart or a 15-minute chart, it's absolutely crucial, because that could trigger in the first 2 or 3 minutes of that session. And rather than waiting 13 minutes for the rest of the price action to unfold, you have that information immediately. As soon as that range, that average true range, has been met and exceeded, the trigger will appear, the indicator will appear, it'll give you that information. You just close out, that's it. It's simple as that. It's the beauty of the indicator. You don't have to wait till the close of the candle or the bar. You will see it instantly as soon as that metric of looking at average true range has been met. I'm just going to pass back to Anna for a moment. Hold on one moment. Hi, Mike. Sorry, I've just, before I pass over to Anna, are you using specific indicators? Yes, the indicator that you're seeing there is the accumulation, what we call the accumulation distribution indicator. It's available on Ninja, it's available on TradingView, and it's available on TradeStation, and it basically works in that way. So as an area is tested and holds, then the indicator in its algorithm will count that, and it will add that to the numerical count, and also the thickness of the line. So as an area is tested, holds, tested, holds, tested, holds, that's 3, tested again, that's 4, tested again. And each time the numerical value increases and the thickness of the line increases as well. So you get this visual representation of these areas of strength, which obviously either act as support or resistance, depending on which way the price action is coming from or to, and then are judged accordingly.
Actually, it's quite a nice time just to come over and see what's happening on the pound Canadian. And we don't, the support and resistance indicator that we have for MT4 doesn't work in the same way as the accumulation distribution does for Ninja and TradeStation. It's all to do with the code. that is available to work with, provided by the platform, and MetaQuotes doesn't do that. But it's, I suppose you could say, in general, when, you know, are we in an accumulation phase or are we in a distribution phase? And these happen in all time frames. And I think there's a really nice example here. And what you do is you really have to, once you understand the chart structure, and obviously if you're in a trend and you're coming to the end of a trend, and it's at reversal points that we see accumulation and distribution. But as I said earlier, you do have to have sideways movement consolidation at accumulation and distribution. And obviously, on a faster time frame, it's not going to be very long, as opposed to maybe on the daily chart. But if you want to see what an accumulation and distribute phase could potentially look like, and you have to whether it then qualifies as such, it does take a lot of, it does take time. The one I want to pull up is the Russell. Now the Russell, interestingly, the Russell, let me bring the chart up. So it's just the best way to describe it. Now if I can move this, squish this down, probably not a very good, it has had a breakout, but essentially it was in a consolidation phase for, here we are, there we are, that's it. This was it was, if I can do a line here, I don't think I can, let's have a look. Oh, here we are, there and there. And there are times when you think, well, could it have been a distribution top? One of the qualifiers for a distribution top is you get a lot of volatility, so you will see a lot of volatile candles. This one on the Russell was quite interesting because you couldn't, it could have been, you know, but each time you had a break lower, it found support. And in fact, it's, as you can see here, it broke up, it broke high, it's been a false break, and it's gone back into this distribution. Now the Russell 2000 index is quite interesting because it's an index that is for very speculative stocks. It's where investors like to go and find the next Apple, the next Google. So it's very volatile. The stocks tend to be quite volatile anyway. And it's a good barometer for, if you like, risk appetite, because when the market traders and investors take on risk appetite, they're going to put their money into more speculative assets, as it were. So that's why. But that, if you look at that and you think, well, that, you know, is that potentially a distribution? It was difficult to tell there because it didn't have the requisite volatility. And it could, you know, it could simply be reflecting, we've had this constant toing and froing of sentiment, and it was simply reflecting that that sort of market mood. But going back to the pound Canadian, what we've had here is, as I said, about reversals. Now the Renko has actually put in this really nice consolidation, as we can see here, up and then down, and it's formed. We don't have any price-based support here. We've got pivots being fired off, so we know that's you know, we have got support there. And as it attempts to break away, each accumulation phase, you know, it may seem like accumulation phase, and we know that because there's load. Look at the volume that's going in there under the up candles. We've got wicks to the bottom of the candles, so we know there's buying in there. So we can see that there is an effort to reverse. So you could say, yep, that is accumulation waiting to push higher. You just have to be patient, and whether that actually plays out or that is going to be insufficient. You also have to set that against the slower time frame, and on the slower time frames, certainly going up to the hourly chart here, as I said, we do have this volume support here. So yeah, it's accumulation down on the faster time frames, but is it sufficient to actually, you know, reverse it on the slower time frames? And the slower time frames, support and resistance, and the price action there really are going to trump what is going on in the faster one. Does that mean you shouldn't trade what you see on the faster ones? No, because if your focus is on the these faster time frames, I've just got the 5, you could be on the Renko 1 and 5, that would be enough for you. But this, what you see developing at the moment on the 5-minute chart and on the Renko, well, you would simply have to be patient if and wait and see. We've got a 2-bar reversal here. You've got a lot of volume going in. You've got pivots. You're off the now you're off the S2. If you are very aggressive, then you would say, yeah, that's sufficient for me. I think there's enough there. If you use the indicators as well, you say, well, and you'd probably go down to something like the 1-minute CSI or and see what is happening. No, that's, you might, well, they're actually moving in the same direction, the 2 lines, which tells you that we are looking at more sideways, basically. So yeah, it possibly potentially looking to reverse, but it is going to take a little time. And then what you would do is you would certainly keep an eye on the volume that is going in at this level. You know, if the volume bars continue to come in with buying, then yeah, then that looks like there is a potential there. If you want to be a little bit more conservative in terms of entry, well, as I said earlier, you really want to see, that bright blue. The trend dots always change first because they are very, of all the indicators that we've developed, other than the ones that fire off in real time, like the volatility indicator, this one is, and the support and resistance indicators, they you know, as soon as a level is hit, that's it. They come out. There's no lag. You know, there's they are in real time. This one is, the trend dot is the closest that we've managed to get to the price action. But as I said, it all depends on your you know, your trading plan. You know, do you think, yeah, that's enough for me? Do I have these, you know, to have these indicators as well? And the matrix is also very good because it tells you where they are in terms of position. We can see the pound Aussie, the 3 commodity ones. We looked at the Aussie and the we looked at the pound CAD and the pound Aussie, and we can see that the pound Aussie has certainly moved much more. That this is a little bit of a laggard. So really, it's really been between these two. If I quickly look at the pound Aussie, just to see what the difference is, we can have a look. Yes, and we can see exactly. Hasn't been such a you know, there hasn't been such a not a struggle. Hasn't taken its time to accumulate. And also on the 5-minute chart, we actually have a really nice hammer candle with a ton of volume underneath it. And crucially as well, on the pound Aussie, the S3 has come into play. Now the S3 is a really important level, price-based level from the Camarilla. It's as powerful as the 61.8 Fibonacci. It's that important. And the next question you're going to ask yourself is, okay, that's moving up. It's moving up very nicely, actually. As you can see, the volume coming in there. Where is it going to? Because that's obviously what you want to know. And the logical stopping point is here, is the volume point of control, which is at 85.66. So as I said, we knew that the pound was being sold off against the 3 commodity ones, and you know, of the 3, let's have a look, put back the pound, it's the pound Aussie which has certainly reversed. But reversed, we had the volume, we had the candle, we also had that key level that came into play, and where you, as I said, in terms of entry, On the 5 minute, when you've got a nice hammer candle, going off one candle is not, you know, we always say it is a signal, you know, it's a strong signal, but you know, just be a little bit patient. It did come off this strong support, but it comes down to you as a trader. You also got the S3, so you could say, yeah, that's great, I like to see that, but I'd like to see it also break away from the S3. Or you could say, yeah, I can see that on the Renko. That's the in-between kind. Yeah, you're going to miss part of the trend. Of course you are. You know, nothing's perfect in this game. You've got to, you know, you've got to learn to be consistent, and you know, it's a balance between risk taking. Obviously, you're always taking a risk, and not caution, but assessing that risk and thinking, okay, let me. I think, you know, I'm happy with is the level of risk that I'm going to take based on my analysis of the charts, and you take it from there. And this is what I meant by the wicks coming to the bottom of the Renko. When you see that, although it's a pullback, it's a red candle, you can see the wick there. That actually tells you that there is still momentum to the upside. So we have to wait and see. And also, if you do get a down candle here, look at the volume. If the volume is, you know, if that stays there, where are we? We've got 2 more minutes to go. If there's, you know, little volume, it may be, you know, a wide-ranging down candle, but the volume doesn't support it. Well, that of itself tells you that's an anomaly. And if we get a wick to the bottom of that candle and the volume goes up, or, you know, even stays the same, we know there is buying under that candle. And as I said, you can use the matrix just to, as I said, keep a track of what the pound pairs are doing. It's you know, if that suddenly starts to turn, it's up to you. But we know that we always have to bear in mind that we are, you know, we are going against the prevailing bias, if you like, on the daily chart, which, you know, after yesterday, this is, you know, is struggling to reverse. After you had such strong moves down, markets move down much faster than they move up. When they have to reverse, you know, it's a bit stuttery. It doesn't suddenly sort of whiz up. And talking about chart patterns, if you overlay that candle on that candle, you actually get a really nice shooting star candle. So, you know, learn to recognize 2 candle combinations. You have a nice shooting star here. In fact, that did actually play out. But when you have 2 candles like this, they are really, really good candles to observe, to take note of, and you think, then you look at the levels where they actually hit, and you think, right, okay, well, that could be a really nice move to the downside, as it has proven to be. But now it's, you know, it's struggling. It's that's just the way it is. So I think that's very good. Can I pass back to you if you're done? You're done? I've put you back to David, and I'll just go back to pound CAD to see if that's had a. I haven't looked at pound New Zealand, but you can do that yourselves on your platforms just to see how they have performed, how that's performed with the 3. You often find with the pound as well, with that particular, these 3 cross pairs, they sometimes, you do get very, very similar price action and very similar looking charts as well on all of them. Not always, but you do. Now this is interesting, because with pound Canadian, we had, as I said, what looked like to be this, certainly you could say that was accumulation. Accumulation is buying, because, you know, look at the volume that came underneath it. But if you look at the Renko, that actually hasn't moved. That's still that's still red. What it does also, if it does go into the in-between color and it doesn't play out, it will go back to the bright red. But you know where that's going. That's going to go back to test that low again. As I said, accumulation doesn't happen in one pass. It's a bit like the, you know, the old tanker. You know, you turn it off. There's still momentum. It's going to take some time to turn around. Turns around faster at the top than at the bottom, though, I have to say. Don't you think so, David? Yeah. It always turns out. I'll pass you back to David. I'm going to say goodbye. We are back tomorrow, aren't we? Tomorrow evening for stocks. So I hope you can join us then.
Welcome back. Just move the chat box out of the way. Just very quickly to wrap up on, this was EuroCAD that I mentioned earlier on. And really just to show you one or two aspects of VPA as well, and also price action. And also, interestingly, I was talking about the volatility indicator. When you saw that, the other thing also to be aware of, even if you haven't got the volatility indicator, when you see prices really move rapidly like they were on the indices, with the euro rising so strongly and the pound falling so strongly, when they move with that real momentum, it's invariably a clue that you're going to see some volatility triggers come into the market. And that's exactly what we saw in these two candles here with the volatility. But this was the trend lower. I always point these candles out. If you're obviously maybe looking for, hold on 1 minute, bear with me a moment. What you're looking for in a downtrend is, and also in an uptrend, you're looking at the shape of the candles, you're looking at where the wicks are, predominantly to the top or bottom. Get some weakness at the top, it doesn't automatically mean it's going to reverse, then it starts to reverse. These are the sort of candles you're looking for, this wick to the upper body, wick here, you've got a decent wick here. And then you look at the volume that's being driven into the market here. This is not buying, this is heavy selling into weakness, down into this area, into congestion. More pushing up, effort to rise. The volume is being driven in, it's not going anywhere, and it looks pretty weak and weedy, and we roll all the way down, and then we start this very strong rally, bullish engulfing candle on the volatility. Yeah, it didn't go into congestion on that one. You might have closed out on that one. You might have jumped back into this one. But look at the volume under this particular candle. Big wick to the upper body. You've got volatility trigger here. This is not going very far. It's either going sideways or it's going to reverse and go all the way. Where is it going to go to? Well, you've also got a wick here to the upper body, which has developed here. You've got a wick here too. Where is it going to go to? The chances are it's going to come right back down to the VPOC. This is 62 to 45. In terms of an intraday trade, that may be sufficient for you. Longer term, it may not. But in terms of where is the market heading next, it looks as though it's going to come all the way back down to the VPOC at 45. So it's a question of looking at the chart, deciding, there you go, that's the candle now formed off. Lots of volume under that candle. Nice big wick to the upper body, not looking terribly strong. And you've also got, just to go back to the support and resistance, I mentioned it on TradeStation. Here it is on NinjaTrader. These are the levels, and you'll often find this, I highlight this a lot too, when you're trading around the volume point of control here, when the price action is trading at the VPOC with this high concentration of volume, which is the heaviest on the chart, you also develop these levels, and it gives you this really nice tunnel of opportunity, I call it, because when the price action starts to break away from there, if you're a congestion trader, if you're a breakaway trader, the one thing you need is patience. You've got to have patience to trade that particular tactic, because you have to wait. But once the market moves away and it's confirmed with volume and everything else, you've got this very narrow area of price action, which is great for placement of stops. It also gives you comfort in terms of retracements against you, where you've got deep areas of support or resistance channel around the VPOC. It's just a very comfortable way to trade. It really lays everything out for you fairly clinically. But to say, you do need patience to trade that particular style of trading, breakout trading, because you have to wait for the congestion to develop. You have to wait for the volume to confirm the breakaway, et cetera, et cetera, et cetera. And of course, this is the nice thing with NinjaTrader. Another nice facet is this is in real, this is your local time. So you don't have to, on MT4, it's very difficult sometimes to identify precisely where things happen in terms of your local time. Here it's not an issue. This is 8 o'clock, so we see the volume starting to build. We had a run up here into the London Open, and then we get this reversal, which is often what you see at the London Open, and the same way you see it at a crossover periods at other points of the day into New York session, but particularly in the London session, when it comes out of Asia and into London, you will see it reversals and prices moving one direction in the European session as it gets underway for the first hour or so, and then London kicks in, massive volume comes in, and you'll see reversal. You'll certainly see volatility as well. Huge volatility triggers at the London session crossover. You'll see them at the London fix at 4 o'clock, and you'll also see them at rollover at 10 p.m. our time, 5 p.m. US time when settlement kicks in as well. So that's it. That's us done today. Just to highlight one or two other aspects, Anna showed you all the indicators at quantumtrading.com. This is Anna's site, annacooling.com. Finally, this is the Quantum Trading Education Program at quantumtradingeducation.com. The complete Forex trading program is just that. It contains everything you need to know to trade Forex with confidence. It's a huge program. You've got psychology, you've got fundamental analysis, relational, technical, and mechanics of trading modules, and then you've got all this other resources underneath. There are around about 450 lessons, I think, something like that, 450, 460, and in addition to that, there are 250 to 300 hours of video. It's huge, plus you've got 13 PDF downloads as well. To supplement that, 8 of them I think are on psychology, and then you've got various others, one on fundamental, one on relational, one on technical, one on the mechanics, supporting all of that. So it's a huge program and in addition to that, it's backed up with the VPA room here, which you can see up here at the top here, which is Anna and myself, where students go to interact, and also we answer questions from them too. And the reason we put the funded program in place is very simple, because we wanted to give our students the opportunity twofold really. First of all, to trade much bigger sums of money, and secondly, to put the knowledge that they've gained on the program into good use on the funded program. And the beauty of it is you are trading our money. You're not trading your money, you are trading our money. There is an entry ticket. If you to gain entry to the program, there are 3 levels. We call it the evaluation stage because it is exactly that down the bottom here. You start at 5,000, 10,000 or 15,000. That's the entry price on each of those levels. That's it. You never pay us another cent, and you cannot lose your money because it's our money. Yes, there are risk and money management rules. You start off trading the 28 spot pairs. It's as simple as that. There are, of course, risk and money management rules, and there's a very simple profit target we put in place on each of the levels. Once you've achieved that profit target, we give you a 35% kickback on it on the level 1 on evaluation. You then move up to this level, which we call portfolio manager level, where we also add in indices and gold, so you have other markets to trade. And in addition to that, we then multiply whatever you started at by 4. So if you started at 15,000, you will then have $60,000 in your account, and you can then trade away. And the other beauty of it is, as you move up the levels, we increase the profit percentage that is kicked back. You receive 50% kickback on the higher levels of portfolio manager level, all the way up to 1 million, where it increases to 60%. And the other thing that changes as you move up from one portfolio manager level to, again, we double the revenue. So you go from 15,000, initial move is to 60,000 to your first portfolio manager level, and thereafter we double. So if you started at 15, you go 60, 122, 44, 80, right the way up to 1 million. It really mounts up incredibly in terms of the profit that is paid back to you. As I say, there's no risk to you. You keep your trading capital safe. You use it for whatever you wish. You can mirror what you're doing in your funded account. We don't mind, and all trading styles are accepted as well. And we accept clients from all over the world. There are no limitations. We take all clients from every particular country in the world. So that's it. That's us done. Thank you very much indeed for coming along today. Hope you've enjoyed it. We will be back, as Anna said, tomorrow evening, I think it is, at 6 o'clock UK time. So that is basically 1 o'clock Eastern, I think. Don't quote me on that because of the clock's changing and all the rest of it, but I think it's 1 o'clock Eastern. Best wishes to you. Keep safe, stay safe wherever you are. Enjoy the rest of the trading day. Remember, over the next couple of weeks, it is going to be volatile, but there are great trading opportunities, particularly in the Forex world, because it really does move. So thanks very much again. See you soon, and bye for now.